Next question. How to structure earnings in a foreign entity owned by a U.S. citizen living abroad? Do earnings carried forward needs to be declared, and what's the fiscal exposure there? So I guess that ties into the previous question. Anti-deferral rules, whether they be PFIC rules, Subpart F, and recently GILTY, mean that the earnings need to be declared in the year in which they earn, assuming it's a CFC, a controlled foreign corp. As we mentioned in the response to the previous question, if it is that you are really not, the company really is not controlled by US exposed persons, then it's not a CFC, and therefore it's not subject to these anti-deferral rules. And then yes, you can, assuming that you're in a jurisdiction like an IBC in Dubai or Cayman or BVI, whatever the case may be, theoretically, it won't be taxed. And you can reinvest, and you can plow back in those profits and reinvest and scale your business. And it will be taxable to you as a US person upon receiving a distribution, either in the form of dividends or salary or bonus or something like that. So the key is to not have it be a CFC or controlled foreign corp, a company controlled by US exposed persons, and control being share of value and voice. So again, that nominees don't work, value and voice. That's a sure way. Now you can use Estonia. I'm sure when I scroll down, somebody's going to be shouting, Estonia, Estonia, Estonia. Estonia has a lot of fans, and I respect that. But the tax rates are pretty high. So you can, there are people who do it, seems like in perpetuity. They just never take a distribution, and they continuously reinvest the profits. But when you do extract those profits, the corporate tax rate in Estonia is in the low 20s. Plus you're paying as a shareholder who's receiving dividends. So, it is pretty aggressive when you contend that you have much lower tax jurisdictions. You have Bulgaria 10%, you have Ireland 12%, and of course you have tax free in other jurisdictions. So, I guess it's you need to do some sort of sensitivity analysis, some sort of comparison. Is it worth picking a jurisdiction like Estonia, and there are others as well, where you're allowed to perpetually reinvest to avoid the GILTY or the whatever? But when you do pull it out, you're going to be stung, or you choose a low tax jurisdiction where it comes out. So there needs to be some sort of comparison done.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.